Hi there, it's Bill with Smart Trades, and it's Sunday, August 22nd, around 5:10 p.m. Pacific time. And first off, we're going to take a look at the longer-term picture in the Dow and get do a quick recap. Overall, what I'm looking for is I believe this leg down is A. We've got a corrective rally back up. We'll call that B, and we should have another leg down towards about 900, or excuse me, 9,000. That said, it's certainly not beyond the realm of possibility that we will continue this B wave up, and it'll take us back to about the 11,200 area. That would be the April highs, but we'll just have to wait and see about that. For now, though, the short-term trend is down. Let's take a look at that. Here's the Dow hourly, and the short-term trend is down. Also, the pattern is set up for a potential acceleration here. In Elliott terms, this is a wave 1 down, a wave 2 back up, a possible second wave 1, and a second wave 2 back up. As long as we don't take out this previous peak here, just below the 10,500 area, this would be the favored scenario. So in particular, if we get a weak rally back up, say, to the 10,300, 10,350 area, I'd look at that very carefully for possible signs of failure and look to get short. Excuse me. Here's the, this is an old chart actually, but it just reviews the resistance points which I had mentioned on Friday and the likely targets for a little bounce that I had been looking for during the day Friday. At any rate, that comes in around 1079 on the S&P and around 1086, and those would be near the 38% retracement level, and the first one, that lower one, is right at the previous fourth wave high. The other one would be previous resistance and support, again around the 1086 area. Now I want to bring your attention to this chart. I think it's quite interesting. You may or may not recognize it. It might look familiar to you. If you look at the price scale, it may throw you for a bit of a loop. And notice this A down, you have a rally back up, a slightly lower low, a high at B that's slightly above the previous high. And sure enough, it looks quite a bit like the current market. However, this is the Dow in 1987 heading into early October, right before the market crash. And again, look at that similarity of pattern. Just over a 62% retracement then, just over a 62% retracement now. And again, the breadth ratios are heading down, and the weekly pattern is at least superficially bearish here. So certainly something to think about and watch out for. We are heading into that time of year as well, obviously. Now, reviewing, going back to 1987, I don't have the ABC labeled in this case, obviously, but you can see here's that first leg down, the second rally back up. And if indeed we're following that pattern, we're right about here now. Now, I don't necessarily favor that that's the case, but it's certainly worth paying attention to. You'll notice that bounce after that first decline off of the high was very shallow. Indeed, all the bounces were pretty shallow. And the Dow dropped 400 points, which at the time was quite a big drop. Now, this is going into that Friday before Black Monday, and Robert Prechter at the time was looking at this very logically from an Elliott wave point of view. We had a 50% retracement. Here's your previous fourth wave low, 1.62 times the A wave down. They all come in around that 2200 area on the Dow. And he issued a report indeed to buy the market that following Monday, which was sent out at that time by mail. The internet didn't exist yet. Faxes were barely used, and certainly plain paper faxes were still a thing of the future. So at any rate, let's go one square down the road here. And here's that, again, this is where we are now, basis the same, if we're in the same type of pattern. Here again is Prechter's targets. And here's what actually happened. We dropped all the way down to below the 700 mark, which is very interesting because, excuse me, let me scroll ahead here. If you look at it, here's what Prechter was looking for, a retracement back to the previous fourth wave low. And what he did, he basically was off by a magnitude of scale. He was looking at a correction of just this last impulse up, when indeed the market in one fell swoop corrected all the way back, from the 1982 lows. Indeed, also of note here, this retracement level is a 38% retracement of the entire rally from the 1932 lows to the 1987 highs. That comes in just about the 1700 area, which on a closing basis is right about where we closed. Additionally, his 1.62A, it actually turned out to be a 4.236A, or just about, didn't quite reach that level. But again, you've got a previous fourth wave, 50% retracement, Fibonacci relationship to wave A, basically everything that Prechter was looking for. He was off by 1 day and 1 degree of scale. Interesting to note here, and certainly it's a possibility that that I'm off by a degree of scale here, and I'll be alert to that. Indeed, at this point, I certainly wouldn't be throwing out any buy orders in front of this market. At least on an overnight basis until we resolve the current pattern, which again is following that 1987 pattern very, very well. So let's watch it here over the next few days. I'm going to review the 1987 situation again. There's something that was lurking beneath the market, as it were, back then. It was an interesting time. Commissions were $100. I happen to be a futures broker. $80 to $100 commissions, for futures. I believe stock commissions were in the $40 to $60 range per trade. There were folks out there charging 40% on options. So if you bought $1,000 worth of options, you paid a $400 commission. I mean, talk about robbery. But it was a very interesting time. During that crash, we had $1,500 ticks, and the data was delayed by 3 minutes. I watched it live from a commodities office as a rookie broker back in '87. Anyway, we'll get into that later. And again, I think there's something that I think you're probably all aware of, but it's interesting to look at it in hindsight and see just how there was what I'll call the superconductor secret affected the market and was lurking below all these bearish times back in '87. Anyway, thanks for watching. Have a great week ahead.